Hi, this is Kerry Artak with Wicked Stocks, bringing you the daily Tesla report for Thursday, December 21st, 2023. Let's jump to the charts. As I've been mentioning now for the last week or so, we are approaching and testing our targeted longer-term resistance that is between 255.70 and 262.71 on the weekly chart, this band of resistance. On the daily chart, the top band is 260.20. So we're rounding up right now. We did come very close to testing that 260.20 channel top on the daily chart on Wednesday. And I do think it's just best to include both of them, 260.20 to 262.70. The top channel on the daily and weekly charts represents our significant resistance. And now that we've pushed into this zone of resistance, as I've been saying, and we've been testing it now for the last few days, you can prepare for, over the next week or two, 230.96, and over the next 3 to 5 weeks, 210.66. Both are still true. So 230.96 in reach by the end of next week, where we could bottom out on a weekly basis. From there, rally back into the 254.59 to 260.20 region. We could fill this wedge out for the next couple of weeks, which is why I give 210.66 a 3 to 5 week objective. I do think following the testing of this significant band of resistance, you can anticipate significant support, which is 210.66, this extreme channel bottom, considered a 3 to 5 week objective. And if, say, by the end of next week we close below 230.96, we're probably just another week, two at the most, from testing 210.66, where, I might add, we can bottom out through all of January, into February, round back up into this band of resistance between 254.59 and 260.20. We could fill the wider wedge out between 260.20 and 210.66 for the next couple of months. And finally, as I've also been saying, now that we've tested this channel resistance, there is a channel bottom that is in the lower 180s. And we don't have it entirely mapped out just yet. But for those of you who trade the 2 to 3 month time horizon, you know, as I've been mentioning now for the last couple of days, you may consider reaching for 180, 175 out of the money puts that don't expire for at least 6 months, because that is the other very clear possibility. I wouldn't expect this upper 180s channel bottom unless we were to close, sorry, wrong chart, below 210.66 in the coming weeks. So yes, closing below 210.66, I would expect essentially the upper 170s. This trend line, also channel bottom from these highs, is in the low 180s and dropping. 177 and a quarter is a 5/8 Fibonacci support level. 5/8 back from this January high from earlier this year against the July low. Boy, oh boy, it's been quite a year. So yes. I guess what I'm really trying to say here is, while I'm anticipating the possibility of the lower 180s over the next few months, holding below 260.20, I don't clearly expect it as a targeted level unless we close below 210.66. But that doesn't mean that you can't scout out some reasonably priced 180 or 170 out of the money puts that don't expire for at least 6 months. I think that is a good play here now. And if we close below 210.66, even better. So that is the big picture. And yes, I don't see that happening today. Closing above 260.20. We did put out a key reversal high, by the way, new post October high, and we closed back below Tuesday's low. That is often a sign of an overbought market in itself. That does underscore the possibility here of 230.96 over the next week or two. Let's take a look at the day itself. I'm hunting around right now for charts. I do have 245.30. You can see both intraday containment levels here right now. 254.59 is this channel top that was once considered 3 or 4 stars that I've now rounded up to the daily and weekly versions of the top one. 254.59 able to contain intraday buying pressures, below which 245.30 is likely. That is this former long-term trend line that we closed above about a week ago, can contain intraday selling pressures. But keep in mind that we remain heavy into next week below 260.20, and breaking 245.30 is certainly possible, and if so today, 239.19 is likely. At 239.19, we can bottom out for the day. This is a solid day trade level, potentially 2 to 3, 3 to 5 day swing trade back into the 254.59 to 60.20 region, but I don't want to cloud the analysis here by confusing you. I do think 230.96 should be considered in reach by the end of next week. And if we settle today below 239.19, make that by the end of day tomorrow. So we could test 230.96 over the next day or two if we close today below 239.19. 239.19, once again, able to contain session weakness. Solid level for day traders. And I also will say cautiously the 2 to 3 day swing trade back to 254.59, 260.20 is possible. And once again, closing below 239.19, 230.96 likely tomorrow, where we could bottom out through next week. And if settled below 230.96, would signal our 3 to 5 week target, then likely within another week or two at the most, 210.66. Once again, holding below 260.20, I maintain a 3 to 5 week objective at 210.66, with possibilities over the next several months of continuing south into the 170s. That becomes clearly indicated with a settlement below 210.66. Now for the upside, and that is to say that what if we close today above 260.20? Actually, I take that back. 262.71. The numbers are a little different on the daily and weekly charts. So it really is, the truth is, it is a weekly settlement tomorrow, Friday, above 262.71 by a full 1% margin that provides us a solid longer-term buy signal. But if we're talking just closing the day, Thursday, above 262.71, then this 275.14 rising channel top becomes a 2 to 3, 3 to 5 day target, and that converges over the next, week or so with this channel bottom at 278.45. So bottom line, closing above 262.71, 278.45 likely within 3 to 5 days. And as I've been saying, I'll take you back to this chart. This is a scenario that could unfold. We close above 262.71 by the required 1% margin of 265.33 or higher at the end of the week, 278.45 likely by the end of next week, and we could play ping pong here for a few weeks then. Between 262.71 and 278.45, there could be a delay in bullish continuation. But as I've been saying now for the last few weeks, it is a settlement on Friday above 262.71 by a 1% margin that provides us a realistic 3 to 5 month buy signal to 346.49. So if we close the week tomorrow above 262.71, no good reason to be short Tesla. Get rid of those out of the money puts, reach for some out of the money calls. It could be a 280 out of the money call that doesn't expire for at least a few weeks, or a 350, 360 out of the money call that doesn't expire for at least 6 months. And that is all I've got to say. Please click like, share, subscribe, and check out wickedstocks.com for those stock picks and the daily triple Q and SPY analysis. I'll be back tomorrow with Friday's Tesla. You have a great day.